the criticism will be.
Welcome to the FX debates here in London at the British Museum. With me is Professor Hannah Scobie, Chairman of the European Economics and Financial Centre. Thanks for being with us today.
Thank you.
Can you tell me how the financial crisis has changed central bank's monetary policy?
Well, clearly the financial crisis has brought about an area of what we call zero or close to zero interest rate policy. And once the target rate reaches that low, you have to find alternative measures. And resorting to asset purchases is quite a viable proposition. And I think they are doing the right thing, buying government bonds or mortgage-backed securities or any other policy but we are much more inclined to go towards asset purchases than straight liquidity injection. Liquidity injection is useful, but if it's a loan to the private sector, the loan has to be paid. So people are not as free to invest the money in equity markets or other forms of assets.
In the US, the Fed has faced a lot of criticism after it launched the QE program in the wake of the financial crisis. Was this justified, according to you?
Not at all. I think those who are criticizing are claiming that this is inflationary. And I mean, that criticism is geared towards higher levels of inflation. And when you have spare capacity in the economy, as the US has, the UK has, and Euro area or Japan has, there's no reason not to engage in quantitative easing and buying asset purchases. It will not create the kind of inflation that they are worried about, I would say.
And where is this QE money going to? Is it going to the right places?
Well, this is where is the QE money going is a question of transmission of policy, and QE is a form of monetary policy. So if you actually look at different regions, they have different monetary policy, but certainly in the case of UK, you can actually see the way the Bank of England has been buying gilts, that amount of cash that's injected into the economy then is partly invested in more bonds and partly invested in equities. And then the equities actually start rising. And the funds that are received, the cash, allows firms to make more issuance, be it corporate bond issuance or equity issuance, and that issuance allows firms, corporates, to retain their staff or hire staff. And as you can see, employment in the UK has been going up. It hasn't been stagnant or falling.
And one way to kickstart the growth for a country is to devalue its currency. So let's talk about currency wars now. Is there a currency war at all, and who's winning it?
Well, this is the fallacy or myth. Is there a war going on? I think I personally don't think it's a war. It's just a byproduct of a domestic policy. If Japan has been experiencing deflation for a long period of time, over a decade, then it makes sense for them to want to create inflation. I personally would add VAT tax, value-added tax. That would push up their inflation pretty quickly. But the whole kind of cause and effect is that if a currency is very strong, you experience deflation because the imported goods have a lower price. And that way you perpetuate a prolonged period of falling prices. So I personally don't think it's a currency war in the case of US or in the case of Japan. What they're trying to do is obviously overcome this spiral of deflation. However, relying on currency, I personally think, is not a very good thing. There are other issues to be addressed. If a country is in need of relying on its currency, that means the structural problems are not addressed. And I think that is where you have to really get to the root of the problem.
Thank you very much, Professor Scobie.